and roll. Let's talk about calculations of pay and deductions and all that good stuff. Okay, can you all see the PowerPoint?
Yep.
Yes.
Okay, good. So we're going to talk about calculations of pay, regular pay, overtime, gross pay, federal income tax, Social Security, Medicare taxes, voluntary deductions, employer taxes, gross ups, state income taxation, and railroad retirement, and then talk about some deductions, involuntary deductions, and net pay. We're not going to do all of that today because we only have 45 minutes. So we will do all of that between now and Friday. I figured today we'll get probably up until about federal taxes, and then we will call it a day and pick up there tomorrow because that's kind of a big section. Okay, so let's talk about calculation of regular pay. Regular pay is pay for time worked. It's also pay for time not worked. Holiday, vacation, sick time, PTO, whatever they call it. It includes overtime premiums. It includes shift differentials. It also includes bonuses, potentially. And there could be many other factors that come into play that I'm sure you all have read about or heard about. Non-exempt employers' regular pay is calculated by multiplying the employee's pay rate or rates by the number of hours worked and the number of hours for which the employee is paid but does not work. Exempt employees' regular pay is their salary for the pay period. So let's talk really quickly about calculating regular pay when there's a non-discretionary bonus involved. So for example, we have a period covering 6 months or 26 weeks where Bill exceeded his production quota at Happy Time Toys and earned a bonus of $910. Bill worked 44 hours each week during the 26 weeks. His employers allocated the equal amount of bonus to each work week and then calculated the additional overtime that would have been due because of that increase in his regular rate of pay due to the bonus. So they took his $910 bonus and they divided it by 26. And that came out to $35 per week that he worked. Then they allocated that $35 per hour. So they did $35 divided by 44 hours each week. And they got 80 cents, which of course was rounded a little bit. So the overtime premium rate would have been 0.5 times that 80 cents or 40 cents. And so the additional overtime for each work week that he would have been owed would have been 4 hours times the 40 cents. So he would have gotten an additional $1.60 per work week. And so for the total over the 26 weeks, he gets $41.60, which is the 26 times the $1.60. So that was a non-discretionary bonus that was given to him as a because of his production over the time frame that he worked. Okay, so that had to be included in his regular rate of pay, and his overtime was then recalculated because of that.
So discretionary meaning that it's the discretion of the employer, means they don't have to give a bonus, they don't have to include it in overtime, versus non-discretionary, it's pre-disclosed, agreed upon, and the employee is expecting it and can calculate it on his own, right?
Right. So this was a non-discretionary bonus, meaning it's part of his contract or part of the agreement that goes with it. If it's a discretionary bonus, the employer gives it to them, it's not part of their agreement or anything, then it doesn't necessarily have to be included in that regular rate of pay. Okay, so tipped is a little bit different. So we think about our tipped employees, they don't have to earn as high of an hourly rate. And the reason for that is because they're earning tips directly from their clients or customers that they are serving. So the federal minimum wage for a tipped employee is $2.13 per hour. And that means that the federal tip credit is $5.12 per hour. So if you add those two things together, you get the federal minimum wage, which is $7.25 per hour. As most of us know, most of the states have higher minimum wage than federal. So this example is strictly if we were in a state that had the same minimum wage as federal minimum wage. We'll get into another example here in a second that is a little bit different. So if you take the employee's hourly wage and the tips they receive, they still must earn minimum wage, or $7.25 per hour for the hours that they work. So if an employee doesn't earn enough in tips during the time frame, then their employer is required to pay them the amount of money to make up for those tips to get them to minimum wage. So that's what we're going to look at here. So Kelly's Grill has employees who receive tips, and the grill pays its tipped employees $2.13 per hour. During one work week, Monica worked 30 hours and received $80 in tips. So let's look at her pay really quickly. She worked 30 hours times her $2.13 per hour and got a total of $63.90. Plus she got $80 in tips. So if we add those two things together to get her regular pay, she got $143.90 for the 1 week. So if we take her $143.90 and we divide it by 30, which is the amount of hours that she worked that week, we get $4.80 per hour. If she was making minimum wage, she would have earned $7.25 per hour. And if we multiply that by 30 hours, then we could do some quick math. That would be $217.50. And then if we subtract out the $143.90 that she did earn, that leaves $73.60 of extra money that she would have earned had she been making $7.25 per hour. So the employer has to make that up to her to make sure that she is paid the minimum wage of $7.25 per hour. So she gets an extra $73.60 from the employer to make sure that she got up to that minimum wage. If she had made more in tips, the whole idea is that she wouldn't have been owed any more from the employer because she would have made enough in tips. Does that make sense? Okay, so in a different scenario, I'm going to stick with the tipped for just a second and talk about how it works in Colorado. So in Colorado, minimum wage is not $7.25, it's 12, what are we up to? $12.32? $12.32 an hour. And the tipped minimum wage is, what is it?
$9.38.
$9.38. So Colorado, you don't get to take as big of a tip credit as the federal government allows you to take, because the minimum wage is higher in Colorado. So your employees, if they're tipped, they still have to make a minimum wage in Colorado, not in federal, because Colorado's minimum wage is higher than the federal minimum wage. So when you're doing those calculations, you have to be a little careful and make sure that the employee is earning minimum wage per Colorado standards and not just per federal standards. All right, so let's take a look at an employee who works in 2 different departments in his company. So Brent works in 2 different departments, Department A and Department B. And when he works in Department A, he's paid $12 per hour. And when he's working in Department B, he's paid $15 per hour. If he works 25 hours in Department A and 20 hours in Department B in 1 work week, his regular pay for the time worked, not including overtime, is going to be 25 times 12, which is 300, and 20 times 15, which is also 300. If we add those together, we get $600. And so 600 divided by the total hours that he worked in both departments of 45 hours is $13.33. So for this particular pay period or work week, his regular rate of pay was $13.33. So any overtime that is calculated for that week has to be calculated on 1.5 of that regular rate of pay. So piece rate is another complicated, super fun way that we get to calculate regular rates of pay. So under a piece rate system, the basic method for determining the regular rate of pay is for piece workers is to add the weekly piece rate earnings to any other earnings for the work week. So if they get any bonuses or anything like that for the work week because they produced extra whatever they're making, that would also have to be included in their pay for the week. And then once you find all of that, you divide by the total number of hours that they worked. So for example, Jane works for Widget Inc., a company that pays production workers based on its units produced. She receives 52 cents plus a bonus, 52 cents per unit plus a bonus of 15 cents per unit for all units produced in excess of 500. So Jane worked 46 hours last week and she produced 725 units total. So her pay would be calculated as follows. She did a total of 725 units and she gets 52 cents per unit. So if we do that math, we get $377. She also gets a bonus for every widget that she makes over 500. So she made 725. So 225 of those were over the 500 limit. And so 225 times the 15-cent bonus per unit would be $33.75. Add those two things together, we get $410.75. I'm going to skip the overtime worked hours line really quickly. To get her regular rate of pay, we're going to take that $410.75, which again includes that bonus. We're going to divide it by the number of hours that she worked in the week, which was 46, to get her regular rate of pay. So her regular rate of pay is $8.93. To get the overtime premium, we're now going to multiply by 0.5, which gives us $4.47. Now, so she worked 46 hours in the week, 46 minus 40 is 6. So she gets 6 hours of overtime for the week. So if we take our overtime premium, multiply it by the 6 hours of overtime that she worked, we get $26.82. We're going to add that to our regular pay that we received. So $410.75 plus the overtime premium of $26.82 means that Jane earned $437.57 for the week. So that's an example of a piece rate type of calculation. Questions on that?
Regular rate of pay would still have to be above federal minimum.
Yes.
Or Colorado minimum. Okay.
All right, so salaried employees are a little bit simpler to determine.
Can I ask you a quick question?
Yeah.
So if it wasn't, as Meanan said, above minimum wage, you would pay them minimum wage and time and a half at minimum wage.
Yes. Good question. To determine a salaried person's gross pay, it's a little bit easier. So all you have to do is figure out how much they make annually, and then divide by however many pay periods you're working with. So for example, Sandra is an exempt employee and she's paid an annual salary of $45,000 biweekly. So her biweekly pay would be calculated by taking her annual salary of $45,000, dividing it by 26 biweekly pay periods in a year, which gives us $1,730.77 for her biweekly salary. Unless, of course, we have a year where there's 27 biweekly pay periods, and then we just all throw our arms up because we're not even going to talk about that right now.
Melissa, what would you really do?
Well, if it is agreed upon that their annual salary is $45,000 a year, then you would actually have to divide their salary by 27 pay periods that particular year to get their biweekly salary. And then the next year, when it goes back to 26, you would have to again recalculate and fix it back. Now, on the other hand, if you had a contract with an employee that said they got paid $1,730.77 per biweekly pay period, but it didn't state that they got an annual wage of $45,000, then I think there's an argument to say that they get 27 pay periods at that same amount. So you have to be careful and make sure that you are following what is agreed upon with the employee in the contract. And as we have seen in the last couple of years, every client does this differently. Okay, so commission is another way that we have to calculate pay. So FLSA regulations say that for a commission computed period for 1 month, multiply the commission payment by 12 and divide by 52 to get the amount of commission allocable to a single week. So for example, a non-exempt sales employee is paid weekly at $9 per hour. He receives a 4% commission on net sales paid the month after the sale. Last month, the employee had $16,000 in net sales and worked 48 hours during 1 week of the month. So to calculate the regular rate of pay, we're going to add 25% of the sales commission. And the reason we're doing 25% is because we're taking the bonus for the entire month and we're dividing it by the 4 weeks. So that's how we got the 25% of the sales commission to the week's pay. So the pay for the time worked, this person earned 48 hours or worked 48 hours in the week at $9 an hour, which is $432. The sales commission was 4% of $16,000, which is $640. We're taking that by 25% because it was only 1 week that the employee worked 48 hours. So we only need to calculate the overtime for that 1 week that they worked more than 40 hours. So of the 640, 25% is $160. So we're going to take $160, add it to our regular rate of pay of the $432 for the 48 hours worked times $9 an hour and get a total of $592. Then we're going to divide that by 48 hours because they worked 48 hours in the week and we get $12.33 per hour. So that's the employee's regular rate of pay for that work week, and the overtime hours would have to be paid on that $12.33. Does that make sense? So all covered employees or all employees covered under FLSA must be paid at least 1.5 times their regular rate of pay for all hours worked over 40 in a single work week. We all know that's the most common overtime law. So when calculating the overtime premium and regular rates of pay, some payments to employees are excluded, such as gifts, paid time off, reimbursed expenses, discretionary bonuses, and that was Angela's question earlier, and benefit plan contributions. So these payments cannot be used to offset any overtime premiums to the employee. So you don't have to pay overtime on paid time off because the employee is not actually working. So if you have a holiday in the week and you pay them 8 hours to be off for the holiday, you do not actually have to pay them overtime. You don't have, that doesn't go into your 40-hour calculation for overtime. Same with sick time or PTO or vacation. As long as the employee is not working, then you don't have to include it. So Jerry worked 35 hours in 1 week, 38 hours in week 2, and 44 hours in week 3. Although Jerry averaged 39 hours per week work week over the 3-week period, he is entitled to overtime pay for week 3, during which he worked 44 hours. So when I was in high school and not as smart as I am now, I worked at a golf course and my boss would work us silly for 1 week and then give us like 20 hours the next week. But because we didn't go over 80 during the biweekly period, he didn't pay us overtime. I was not smart enough to know that this was illegal. I wish I had known. But now that I know, I should go back and make him pay me for all those hours that I worked overtime. So it's important to know that it's 40 in a week, not 80 in a biweekly pay period. It's 40 in a week. So let's see. Sam receives a holiday bonus of $50 from his employer, not included in his regular rate of pay. His regular rate of pay is $10.50 per hour. He worked 45 hours during the work week. So Sam's regular pay was 45 times 1050 or $472.50. And his overtime premium pay was 5 times half of 1050 or $26.25. The bonus that he got of $50 cannot be used to offset the overtime pay. So the gross pay for the week is his full regular pay of $472.50 plus his overtime premium pay of $26.25 plus the $50. So the $50 bonus that he got cannot be used to offset the overtime that he is owed. There are some types of payments that can be used, however, to offset overtime premiums. So overtime premiums paid for working more than 8 hours in a single day, or for working hours worked in excess of an employee's normal working hours for the work week. So for example, in Colorado, if you work over 12 hours in a day, you get overtime on those hours. Those hours then that you work over 12 in a day have already been paid at an overtime premium, so you don't have to count them in your 40 hours for the week, if that makes sense. If an employee works on Saturday, Sunday, or a holiday, or another regular rest day, Massachusetts has a day of rest law that you get paid extra if you work on Sundays. So that's an example of a time where you would get an overtime premium to work on a Sunday. If the overtime premium is paid at least 1.5 times the rate for similar work done during the normal work week, then the premium does not need to be included when calculating the employee's regular rate of pay. In Massachusetts, on the other hand, it is not 1.5 times, therefore it does have to be included. So that goes to that we already talked about. If an employee works at more than one rate during the week, then their overtime rate gets, or their regular rate of pay, I should say, is a blended of those two rates, and then their overtime pay would be calculated on that blended rate. So premium pay for work outside of the employee's regular workday, more than 8 hours, or work week more than 40 hours established by a valid union collective bargaining agreement, can also be used to offset overtime premium. So some unions have special rules that say if you work outside of 8 hours, you get an overtime premium, and those would then not have to be calculated into your regular rate of pay. So let's talk again about the weighted average if an employee works at more than one rate of pay during the work week. So the regular rate of pay must be at least the weighted average of all of the rates used during the week. So let's look at an example. Calculate overtime for Larry, who was paid a shift differential for working different shifts. So on Monday, he worked 8 hours at $10 an hour. He worked 9 hours at $10 an hour on Tuesday. On Wednesday, though, he worked 8 hours at $11.50 per hour. On Thursday, he worked 10 hours at $12.50. And on Saturday, he worked 8 hours at $10 an hour. So if we multiply all those out and we add them all together, we have a total of 43 hours and a total amount of pay for his time worked of $467. To get our regular rate of pay, we're going to divide by the 43 hours that he worked, and we get $10.86. To get our overtime premium rate, we're going to multiply that by 0.5, which gives us $5.43. He worked 43 hours during the week, so that means 3 hours of the week gets the overtime premium. So 3 times 543 is $16.29. And if we add his full regular rate of pay, or regular pay of $467 plus that overtime premium that we just calculated of $16.29, we get $483.29 total for the week for his overtime. But we could not just pay his overtime so Saturday is the day when he hit the overtime and he was earning $10 an hour. But you have to do the weighted average of all of the time that he worked over the work week and the percentages of time that he spent in each of those departments to figure out that regular rate of pay. All right, pop quiz. So under the FLSA, calculate the regular rate of pay for a non-exempt employee who works 30 hours at $10 per hour and 20 hours at $15 per hour in a work week.
Sorry, the answer is already there. It shouldn't be.
I saw that.
It should have come in afterwards.
It's all good. It's okay, don't look at it.
30 hours at 10. Oh, and again, for those who are taking the class for the RCH credits, please do put your answers into chat so that we can have a record of your participation.
So real quickly, if we take the 30 hours times $10 an hour, we get 300. If we take 20 hours times $15 an hour, we get 300. If we add those together, we get 600. And if we divide by 50, which is the total amount of hours worked for the week, then his regular rate of pay was $12 an hour.
So what was his total rate of pay? What was his total paycheck? Ooh,
Ooh,
ooh.
good one.
$660?
That's what I got.
Good. As long as I match Melissa. Yay.
No pressure. That was fast math.
No doubt. I was like, shit.
All right. So let's look at a non-exempt salaried overtime person. So Bill works 40 hours per week and is paid a monthly salary of $3,200. So if we take his monthly salary and we multiply by 12, because it's a monthly salary, we get $38,400 per year. If we think about how many hours a normal 40-hour-a-week employee works, we can do 52 weeks times 40 hours a week, and we get 2,080 hours that they should work in a year. And so if we take the 38,400 and divide by the normal hours that this employee should work throughout the year, since he's a normal 40-hour-a-week employee, we get $18.46 per hour. So that's his regular rate of pay. So non-exempt salaried employees must be paid at an hourly rate for hours beyond those the salary represents. For example, a non-exempt salaried employee whose salary is for a 35-hour week, working 38 hours must be paid 3 hours at the overtime rate of the regular rate of pay. So a salaried person who is non-exempt is based on a certain number of hours during the week. In our example, Bill was 40 hours a week. So if he had worked in excess of 40 hours a week, since he's non-exempt, he would get an overtime premium for those hours that he worked in excess of 40 a week. And to figure that out, we did his regular rate of pay, and then we would multiply by 0.5 to figure out how much he would get in the overtime premium. And that's above and beyond his normal salary because he's a non-exempt salaried individual. Okay, so if Sarah is paid a semi-monthly salary of $2,000 and works 35 hours per week, then her yearly salary is going to be 2,000 times 24. Again, there's 24 semi-monthly pay periods in a year, so that's why we're multiplying by 24. So her annual salary would be $48,000 a year. Now, she is on a 35-hour week. So instead of multiplying 52 by 40 like we did in the last example, we're going to multiply 52 by 35, which gives us $1,820 hours that she should work during the year based off of that 35 hours per week. So if we divide the 48,000 by the 1,820, we get her regular rate of pay at $26.37 per hour. So if she works in excess of 35 hours in a week, then she gets overtime premium on those hours based off of a regular rate of pay of $26.37. So if, like in the next example, she works 42 hours in one work week, she must be compensated for the hours worked over 35. So we've just calculated her regular rate of pay of $26.37. And we're going to multiply by 7 because she normally is scheduled to work 35 hours in the week. She worked 42. So 42 minus her normal 35 means she worked 7 hours of overtime. So 2637 times 7 is $184.59. The overtime premium rate is going to be that $26.37 times 0.5. That's the half of the regular rate of pay, which is $13.19. $13.19 times 2. Now, the reason we're multiplying that by 2 is because it's only 2 hours that were over 40 in a week, because the law for FLSA says any hours worked over 40 in a week have to have overtime premium. So that's why we're only multiplying that by 2 hours.
It's like a trick question.
It is a very big trick question. And I will tell you right now, when I took the CPP exam, they did this to me.
Right, right.
So this is a good example. Yeah, this is a good example. So although she gets paid an extra $184.59 for those 7 extra hours that she worked, she only gets the overtime premium on 2 of those 7 hours. So to get her total amount that she's going to get for the entire work week is going to be, for the semi-monthly period, I should say, is going to be $2,000 plus the $184.59, which was her regular rate of pay times the 7 extra hours she worked. Plus she gets $26.38 in overtime premium, which was only on the 2 hours over 40. Yes, that was a very big trick question. And yes, I had one on my CPP exam. So if you take note of that one, I would for sure. Okay, so commission overtime premium pay. So Mike is a non-exempt employee who is paid $9.50 per hour and receives 4% commission on net sales. Sales commissions for the prior month are paid with the first pay period of the following month. Sales amounts can be calculated on a monthly basis and are allocated equally to each week in the month. So his net sales last month were $10,000. So last month, Mike worked 45 hours during week 1, 40 hours during week 2, 42 hours during week 3, and 50 hours during week 4. He has already been paid for his hours worked last month. His employers must calculate Mike's overtime pay based on his commissions. So for week 1, his overtime premium rate is going to be 0.5 times $9.50, which is $4.75. He worked 5 hours times $4.75 is $23.75. His regular pay was 45 times $9.50, which is $427.50. His commission for week 1 is going to be 4% of 10,000. And then we're going to multiply that by 25% because we're only looking at 1 week of the month, which gives us $100. So his total pay for week 1 is going to be $427.50 plus the $100, which is $527.50 divided by 45, which is $11.72. And then we're going to do his overtime premium rate. So his regular rate of pay was $11.72 based off of that calculation we just did, which took into account the $100 of commission that was allocated to that week, multiplied by 0.5, and we get $5.86 times the 5 hours of overtime that he worked in the week, gives us $29.30. So his additional week 1 overtime due is going to be $29.30 minus the $23.75, which is $5.55. Okay, so does that make sense? He was already paid the overtime premium rate for at the $9.50. So the only thing they have to do is the difference between the rate the overtime rate that he's normally paid and the overtime rate calculation adding in the commission. So that's why they only owe him $5.55 for week 1 in additional money. Week 2, he only worked 40 hours, so he doesn't get anything extra. So we don't have to do anything with that one. Week 3, on the other hand, he worked 42 hours. And so again, we calculate his regular rate of pay. His regular pay that he got for the entire week was $499, or not his regular, but his total pay was $499. If we divide that by $42, we get $11.88. Multiply that by 0.5, we get $5.94 for his overtime premium rate for that particular week. And then we take and subtract the difference between the overtime that he already received and the overtime that he should have received. And we get an additional $2.38. So they owe him the difference between those two. Very similar week 4, except that week 4 he worked 50 hours, so he has a little bit more overtime going on. So if we multiply out his regular pay, add in his commission, his total pay for week 4 was $575. His overtime premium rate is going to be $11.50 times 0.5, and that's after we added in his commission of $100. Multiply about that by 10 because he worked 50 hours in the week, and we get $57.50. The overtime premium that he was already paid though was $47.50, and so the difference between the two is $10. So the additional amount that the employer owes him for all of this is $17.93, which is the additional amount for week 1 plus week 3 plus week 4. So this example is super confusing because he was already paid for the overtime that he worked at the $9.50 an hour. So you're only having to do the difference between what he was already paid and what he earned in commission. That would have changed his regular rate of pay for those weeks. Does that make sense? So piecework overtime is another fun one. Once the regular rate of pay is determined, a piece worker must be paid an overtime premium equal to 1/2 of the regular rate of pay times the number of hours worked over 40 in a single work week. The premium is in addition to the piecework earnings for the week. So for example, Brad receives $1.75 for each doll he assembles, plus $25 bonus per doll for each doll over 352 he assembles in a regular 46-hour work week. In one work week, Brad assembles 420 dolls. So his regular piecework earnings are $420 times 175, which is $735. His production bonus is $68 because he made 420, which is 68 over his 352 doll limit for earning the bonus. So 68 times 25 cents is $17. So if we add his plus the bonus of $17 gives us $752. His regular rate of pay then is $752 divided by 46, which is $16.35. His overtime premium rate is 0.5 times that $16.35, and he worked 46 hours in the work week. So 6 times his $8.18 in overtime premium rate is $49.08. So he gets a total of $752 plus the $49.08 to get $801.08 for the week. So another method is that during overtime hours, employees may be paid at a rate not less than 1.5 times their regular piece rate for each piece made if the employee agrees to this rate before the work is performed. So for example, Sally receives $3.50 for each figurine she paints and $5.25 for each figurine she paints after working 40 hours in a work week. In one 45-hour work week, she painted 140 figurines in the first 40 hours and 18 in the next 5 hours. So for the first 40 hours, her regular piecework earnings are 140 times 350, which gives us 490. Her overtime piece rate is 350 times 1.5 is 525. So we do 525 times the 18 that she made in the hours that were worked over 40, which gives us 94.50. So $490 plus 94.50 is $584.50. And so her regular rate of pay comes out to $484.50 divided by 45, which comes out to $12.99. All right, it is 11:42. Do you guys want to stop there or do you want to go on?
We
That's
just go
kind of
to
a
the
good
next
stop.
slide. One more slide. Pop quiz.
Look at you go. Good job, Megan. Perfect stopping point. A non-exempt salaried employee is paid $2,000 per month and normally works 40 hours per work week. How in this work week, when the employee works 45 hours, under the FLSA calculate the employee's gross pay for the week? So they're non-exempt and they're salaried and they get $2,000 per month and they normally work 40 hours a month.
Mine's wrong.
Yours is wrong?
I missed that fancy word, non-exempt.
Yes. So the correct answer is $548.08. Did anybody get that?
Yeah, I did.
That's awesome. Manna, did you get it?
I think so. I had one more step to do, but yeah.
Oh, sorry. I was too fast.
Oh.
All
So I
right,
haven't
kids.
taken the CPP in a long time, but so how important was the rounding? I see that you said something about it, Rebecca.
So the CPP is 100% multiple choice. There is no, it's all multiple choice. So
Okay,
rounding,
So,
it doesn't become an issue anymore because it's going to be within, I mean, their answers are not within pennies, you know what I mean?
okay.
But I think that they tell you, if I remember correctly, I think they tell you to round as you go. Is that right? Does anybody else remember?
I believe that was correct.
Okay. Yeah, if I remember correctly, I think that they told us to round as you go to get the most close answer that you get to them. So
That was awesome. I really like the 45 minutes better than 2 hours. Thank you for doing
I
that.
agree. It's much easier for me. I hope it's working well for you guys. And Manon, thank you for putting it together. And I'll talk to you guys all tomorrow.
All right, see ya, bye.
Thanks.
Bye.
Aye.
Bye.
Yeah, that was not exhausting.